Strong internal controls are essential to effective financial oversight and are reinforced through a structured annual internal financial review conducted by the Finance Committee. This process emphasizes the importance of performing a thorough and accurate examination of the financial statements and underlying transactions to ensure their reliability, transparency, and accountability. By systematically reviewing the financials, the committee is better positioned to identify items that warrant further scrutiny and to ask informed follow-up questions when something does not appear reasonable or consistent. A critical component of this review is recognizing and evaluating red flags, specific conditions, patterns, or anomalies that may indicate heightened risk or the need for deeper analysis. These indicators are informed by a multi-year research study into fraud, theft, and embezzlement cases involving nonprofit organizations across the U.S., Great Britain, and Canada, and underscore the role of proactive oversight in preventing misconduct and strengthening overall governance.
The Finance Committee's role is mandated by the organization's bylaws and reinforced by recognized best practices, underscoring the importance of sound governance. The committee exists to support and assist the executive director, treasurer, and the president and board of directors in fulfilling their fiduciary and oversight responsibilities. By providing informed guidance, constructive feedback, and practical input, the committee helps strengthen financial decision-making and accountability across the organization. In carrying out this responsibility, the Finance Committee works closely with staff, primarily the executive director, treasurer, and accountant or bookkeeper, to oversee financial operations, monitor controls, and ensure that financial activities align with organizational policies, strategic goals, and regulatory expectations. The Finance Committee serves as a confidential sounding board for the executive director and treasurer, providing a trusted forum to discuss financial concerns, risks, and strategic considerations. The committee reviews financial statements on a monthly or quarterly basis to maintain ongoing awareness of the organization's financial condition and performance. Through this regular oversight, members develop an understanding of key trends, emerging opportunities, and operational challenges affecting the organization's finances. The committee also offers feedback and assistance on major financial decisions, helping leadership evaluate options and implications before action is taken. A central responsibility of this role is conducting the annual internal financial review, which supports accountability, transparency, and strong financial governance. The annual internal financial review is sometimes informally referred to as the audit, but it is not a full GAAP or GAAP-compliant audit procedure. Instead, it is designed to ensure general compliance with IRS 990 requirements and the accuracy of financial information reported to the board of directors. The review provides meaningful guidance and constructive feedback to the executive director and treasurer, helping them strengthen financial reporting and internal controls. It also serves as an important deterrent against negligence and misconduct by promoting transparency and accountability. Ideally, the process will surface any material misstatements or significant concerns, including potential fraud, theft, or embezzlement. While limited in scope, the review is conducted by Finance Committee members and plays a vital role in supporting sound financial governance. The testing procedures for an internal financial review are designed to support thorough documentation, consistency, and accountability throughout the process. A dedicated workpaper is provided for each category of review to assist Finance Committee members in documenting procedures performed. Findings and conclusions. When the committee includes multiple members, completed workpapers may also be reviewed by a designated quality control member to ensure completeness and accuracy. The testing itself includes a mix of approaches. Some procedures focus on verifying figures reported on the financial statements, while others involve reviewing supporting documentation to confirm that transactions are valid, accurate, and properly authorized. In addition, selected transactions are examined through random in-depth testing to provide deeper insight into financial activity and help identify potential errors, irregularities, or areas requiring further review. There are 6 categories for testing procedures. They cover the main areas that are often susceptible to fraud, embezzlement, or conflict of interest. They are generic, but can be adapted to fit the needs and particular circumstances of the organization. The procedures, as well as the threshold amounts, may be expanded both in scope and depth if the Finance Committee member determines that additional information is needed. Before the review, the entire committee should study the general instructions and understand their assignments. If there are any questions, raising them up now is appropriate. It is also good to bring questions or issues up during the review itself. Overall, the Finance Committee should be alert to ensuring that the transactions under review are properly recorded, accurate, and included in the proper financial statement category. In doing so, the members should be able to answer the following questions. Is the transaction documentation or financial item complete, i.e., anything missing? Did it actually occur and exist, and in the manner in which it was recorded? Is it accurate, valid, and properly allocated to the proper financial statement area? Is the information sufficiently understood, properly documented, and for a valid and legitimate organizational purpose?
Cash collections represent the area most vulnerable to theft. In addition, those with access to the bank account information can also use that access to make unauthorized purchases or cash withdrawals. Many schemes could have been detected early through a straightforward review of bank statements. As part of the review, it is important to verify that cash balances reported agree with the bank records. All outgoing wire transfers should also be traced to ensure they are authorized, properly recorded, and consistent with organizational purpose. Finally, supporting documentation should be carefully reviewed to confirm that transactions are valid, complete, and appropriately approved, helping to identify unusual activity and strengthen overall financial oversight. Investments, trusts, gifts, and similar assets are unfortunately susceptible to manipulation for personal gain and therefore require careful review. As part of the process, current end-of-fiscal-year balances reported on the financial statements should be verified for accuracy and completeness. All withdrawals must be examined to confirm proper authorization and appropriate use of funds. The current status of trusts, wills, bequests, and securities donations should be reviewed, including tracking their location, associated net assets, and any related withdrawals. Items characterized as loans or notes warrant heightened scrutiny, as non-profit organizations typically do not lend funds, and such transactions may signal the need for further investigation. The reviewer for this category obtains the end-of-fiscal-year financial statements and the property and equipment ledger, sometimes called the fixed asset list, for both the current and prior fiscal years. Significant additions to property and equipment must be identified and vouched, with all supporting documentation reviewed for additions. Likewise, any significant property and equipment removals, disposals, excesses, or write-offs need to be identified and vouched, and supporting documentation was examined to ensure proper authorization, accuracy, and compliance with organizational policies. Checks function as a cash equivalent in many nonprofits and small organizations, making them a significant area of risk for theft. A focused review should include examining the 10 largest checks and a meaningful sample of additional random checks, along with all supporting documentation, to ensure payments are proper, authorized, and aligned with organizational purpose. Vendor relationships should also be carefully reviewed by examining contracts, payment histories, and supporting documents to identify any undisclosed personal, financial, or business relationships. Particular attention should be paid to whether individuals involved in approving, issuing, or benefiting from payments have conflicts of interest, as related party transactions or inappropriate influence can undermine financial integrity and governance. Debit and credit cards present a heightened risk for misuse because they provide direct and immediate access to organizational funds. Without strong oversight, cards may be used for large, improper, inappropriate, or questionable charges that do not align with the organization's mission or policies. An appropriate review should include a careful examination of credit and debit/ATM card statements to identify unusual spending patterns or transactions lacking a clear business purpose. It is also critical to determine who has access to the cards, what internal controls are in place to monitor their use, and whether a formal policy governing card usage exists and is consistently followed. When improper or inappropriate charges are identified, the organization should confirm that reimbursement has been sought, properly documented, and fully collected, ensuring accountability and reinforcing responsible stewardship of organizational resources. A payroll and reimbursement review is a critical control to ensure compensation and payments are accurate, authorized, and compliant with legal and organizational requirements. The review should include examining payroll records for key employees, such as the executive director, operations manager, and other individuals deemed appropriate, including the highest paid staff, to confirm that salaries, wages, and benefits are properly approved and correctly recorded. In addition, a sample of reimbursements, such as 15 random transactions, should be reviewed to ensure they are supported by adequate documentation, reasonable in nature, and aligned with organizational purpose and policy. The review should also confirm that required payroll taxes and withholdings are being accurately calculated, timely remitted, and properly paid to the appropriate tax authorities, reinforcing accountability and compliance. At the discretion of the Finance Committee Chair, additional tests and/or finance areas may be reviewed or covered, including horizontal and vertical analysis of financial statements, the budget-to-actual variance analysis, gaming account activity and reporting, if any charitable gaming conducted, or inventory and fixed asset inspection/audit internal control environment survey, retirement contributions, insurance coverage, elections, and payments policy and procedures audit specific account, or fundraiser audit, impressed fund or petty cash.
Red flags are warning signs or indicators that suggest something may be unusual, improper, or inconsistent with an organization's financial activities. They do not by themselves prove that fraud, theft, or misconduct has occurred. Instead, red flags signal the need for closer review, additional questions, and when appropriate, further documentation. Examples include unexpected financial anomalies, weak or bypassed internal controls, unexplained transactions, missing documentation, or patterns that do not align with the organization's normal operations or approved policies. Red flags are best viewed as the beginning of an inquiry rather than a conclusion, helping reviewers focus attention on areas of higher risk. The annual internal financial review is critical to identifying red flags because it provides a structured, independent, and disciplined examination of financial activity by the Finance Committee. Through this systematic testing, such as reviewing financial statements, examining supporting documentation, and performing random, in-depth transaction reviews, this process increases transparency and accountability. Regular review also allows the committee to spot inconsistencies, trends, or behaviors that might otherwise go unnoticed in day-to-day operations. By identifying red flags early, the financial review helps prevent small issues from developing into larger ones and supports corrective action when needed. It also reinforces a culture of ethical behavior, strong controls, and responsible stewardship of organizational resources. Fraudsters commonly display distinct behaviors that can serve as warning signs of their misdeeds. Organizations can improve their financial governance by taking these behavioral red flags into consideration when designing and implementing fraud prevention and detection measures. The Association of Certified Fraud Examiners conducts research and publishes Occupational Fraud, a report to the nations. The 2024 version has been the largest and most comprehensive study ever conducted on the costs and effect of occupational fraud. In their latest edition, the ACFE found that these are the typical behavioral red flags that Finance Committee and board members should be on the lookout for. Knowing the red flags of fraud is essential because they serve as early warning signals that something in an organization's processes, behaviors, or financial patterns may be going wrong. The ACFE resources on your screen highlight just how broad and consistent these indicators can be, from conflicts of interest and collusion to behavioral shifts, asset misappropriation patterns, and even just breakdowns in internal controls. These articles can emphasize things like how to interpret anomalies, how to connect behavioral clues with documentary evidence, and how to avoid the organizational pitfalls that allow misconduct to escalate. Together, these resources reinforce a core truth. Recognizing red flags early isn't just about catching fraud. It's about strengthening the programs and systems, protecting vulnerable stakeholders, and building a culture where transparency and accountability can thrive. Well, hopefully this video on a nonprofit internal financial review has been helpful. I thank you for watching and appreciate your time.
The information in this presentation is for informational purposes only. It is not intended for legal, accounting, or other professional advice.